All right, let's get straight into it. If you've bought a new car recently, listen up. You might have left some serious cash on the table without even knowing it. Yeah, today we're talking about a tax refund that tons of people just miss, and it could be worth thousands.
So let me ask you a really simple question. Did you buy a car that cost over 10 lakh rupees? If you're nodding your head yes, right now, you're definitely going to want to stick around for this.
Because, believe it or not, that big purchase you made, it might have a hidden financial perk just waiting for you. We're talking about a refund that was yours all along, but you might have totally forgotten about it.
Yep, you heard that right. This is all about finding that hidden money in what's probably one of the biggest purchases you'll ever make. And look, this isn't some kind of dealership discount or a limited time offer. Nope, this is your money, just sitting there waiting for you to claim it. So, what's the magic number here? It's 1%, just 1%. See, when you buy a car in India for over 10 lakh, the dealer is legally required to collect an extra 1% of the car's value right then and there.
But, and this is the part everyone gets wrong, that 1% is not just another tax or some random fee that vanishes into thin air. The best way to think about it, it's like an advance payment you've made on your yearly income tax. Okay, so this whole thing has a name, and it brings us to an acronym you've got to know, TCS. Now, I know it sounds a little technical, maybe a bit jargony, but I promise it's super simple. Let's break it down.
TCS just stands for tax collected at source. And the source in this case, well, it's your car dealer. They're the ones who collect this tax from you for the government. So think about it. On a 20 lakh rupee car, that's 20,000 rupees. On a 40 lakh car, it's 40,000. It adds up.
So, how does the money actually move around? It's pretty straightforward, really. You pay the dealer the full amount. Then, the dealer takes that 1% and sends it over to the government. And here's the most important step. That payment gets linked directly to your PAN card. It officially becomes a part of your tax record for that year. Okay, so now you know this money is rightfully yours. The big question is how you actually get it back. Well, the good news is the process is way simpler than you'd think. It's already built right into the regular tax filing system.
The key to this whole thing, your golden ticket, is a document called Form 26AS. You can think of it as your yearly tax credit statement. It's basically a summary of all the tax that's been paid on your behalf, and that TCS payment, it should be sitting right there.
So here are the steps, nice and simple. First, you log in to the income tax portal. Second, you find and check your Form 26AS. The TCS amount the dealer paid should be listed there automatically. Then, when it's time to file your income tax return, your ITR, you just claim it. That's it. All right, so you've claimed it. Now what happens? How do you actually get the benefit? Well, it plays out in one of two ways. It can either lower the amount of tax you have to pay, or you could get a straight-up cash refund.
To make this crystal clear, let's use a quick example. Let's talk about Amit. So Amit just bought himself a shiny new car for a cool 30 lakh rupees. Now, following that 1% rule we talked about, the dealer collected 30,000 rupees from Amit as TCS. They paid it to the government, and now that 30 grand is sitting in Amit's tax account, linked to his PAN. Okay, let's imagine two different situations for Amit. Scenario 1, let's say his total tax liability for the year comes out to 50,000 rupees. Well, that 30,000 he already paid as TCS gets subtracted, so he only has to pay the remaining 20,000. Make sense? But what about scenario 2? What if his tax bill is only 20,000? He's already paid 30,000. In that case, the government actually owes him money. He gets a 10,000 rupee refund sent right back to him. Pretty neat, huh?
Now look, this process is usually automatic and smooth, but there is one last thing you absolutely need to know. Think of it as your safety net, just to make sure you're always covered.
And that safety net, that essential piece of proof, is a document called Form 27D. The easiest way to think about it is like a personal receipt for this specific tax payment. It's the official record of the transaction. So, Form 27D is the official TCS certificate. And here's the thing. Your car dealer is legally required to give this to you. It is the ultimate, undeniable proof that they collected the tax and paid it for you. So why is this little piece of paper so important? Well, because, let's be honest, sometimes systems mess up. If for some reason that TCS amount doesn't pop up in your Form 26AS, or maybe the number is wrong, this certificate is your proof. It's what you use to get it fixed. So the bottom line is, always, and I mean always, ask your dealer for your Form 27D when you buy the car. And really, that's the whole point of this, isn't it? The biggest takeaway is that this isn't some clever loophole or a sneaky trick. It's your money, plain and simple. You just prepaid some of your tax. All you got to do is check your records and make sure you claim what's yours. Which kind of leaves us with one last question, just for you to think about. That big car purchase you made, you didn't accidentally forget about this refund, did you? You know, it might just be worth a look.